Good morning, everybody, and welcome to the 2021 Annual Commodities Outlook. This session will be for the press. So we're going to go straight to the presentation, and I'll have my colleague David Ibidapo. He is the research analyst at AFEX, and he will run through a presentation, and then afterwards we'll have the Q&A, so that if you have any questions, you just get to we'll get to answering them. But while that is going on, if you have questions, you can drop them in the Q&A box. And if you have comments, you can leave them in the chat box. So I'll just hand over to my colleague David, and he will run you through the presentation. Thank you.
Hi, good morning, everyone. Good morning, gentlemen of the press. We are so delighted to have you here, giving us a review how 2020 went and giving us our outlook for 2021. I am very, very happy to I want to thank everyone for giving me this opportunity. All right, so not to waste any more of our time, I need to be sure everyone can see my screen. So you can just drop at the comment if you can see my screen, and so that we can just move ahead. All right, so a very quick one. So majorly I'll be focusing on our 2020 wet season review survey that we had last year, and also giving a little dive into what we expect 2021 to look like. And so just flow along with me even as we go. Thank you. All right, so in 2020, majorly, the major highlight in 2020 was the COVID-19 pandemic, amongst other macroeconomic factors that kind of shaped the way a lot of sectors in the economy actually performed. And the COVID-19 pandemic was kind of a very, very unique pandemic, a shock. Yeah, no one expected it, but majorly it affected supply and also affected demand. It disrupted supply activities in the global space and also in domestic markets, and in the domestic space, that's Nigeria, and also affected demand, weighed on demand. So in the global space, we saw a lot of activities, mostly bearish in most commodities. For example, the crude oil market, right? We saw in the first half of the year tanked by around 70% in crude oil prices to prices lower than 2019 prices. So majorly, we saw weak demand in the space, and it actually weighed on a lot of prices, even in metals and across other commodities. Nigeria was not immune to this pandemic, as we also saw more of like a devastating effect on the Nigerian economy. And for the first time in history, we saw a very big contraction by as much as 6% in the second quarter of the year. So to run largely, so majorly what we saw is that we saw the impact of the COVID-19 felt or in increased food prices. So majorly, if you see my slide, you will see that between January, sorry, please.
David, you're muted, please.
Thank you. Okay, so we saw panic buying, soaring prices on the news of lockdown measures. And you can see from my screen between February, March, we saw inflation rising, accelerating faster than usual. And also, so in determining, in affecting movement of prices, panic buying spurred that. We also saw interstate movement restrictions, which actually restricted the flow of commodities, food commodities from other producing states to more commercial areas. Then also disruption of the rainy season farming and logistics challenges in the food distribution space. All weighed in determining the price movement for in 2020. Then also other impacts were that we saw a depletion in national strategic food reserve. So in a way to ameliorate the effect of the pandemic on the poor and also on households and for the country generally, we saw that the federal government actually approved a distribution from the national strategic food reserves of about 70,000 metric tons of grains majorly. And so that's in order to actually ameliorate the effect of the COVID-19 pandemic. Then also we saw that it actually slowed the implementation of funding interventions from the CBN and also the government. A lot of companies during the period, agri-processors during the period, because they're not sure of, because of the uncertainty around the COVID-19 pandemic, couldn't really take advantage of these funding interventions. Then also we saw decline in farmers' incomes. So income levels actually reduced as a result of lesser activities in the space. So farmers were not able to go to the farms to farm due to restriction in movement and in order to curb the spread of the virus. Then also majorly we saw that there was a decline in export earnings. And this is largely, so export goods like cocoa, ginger, sesame, and the likes. We didn't see a lot of export activities during the period, and that's a result. That's actually a resultant effect of a largely weighed demand in the global space. So a lot of countries, in a bid to check the impact of the COVID-19 pandemic, actually had to close activities, and we saw that lots of demand activities were not pushing a lot of our commodities out of the country. Then majorly we largely saw the effects. We largely saw the effect also in the agricultural space. Sorry, okay. In the agricultural space, so we know that the agricultural sector remains like a very, very key sector in driving GDP growth. Though resilient during the period, we saw that agricultural sector GDP actually slowed in 2020, in Q1, Q2, and Q3 of 2020. Though when you compare to other sectors, it was quite resilient. However, crop production, which actually accounts for 92% of the total sector's GDP, because we saw little or muted activities in that sector, it actually impacted on the overall GDP of agriculture, and we saw slow growth in that space. So majorly I will be going straight into, because like I said earlier, my major focus is on our wet season survey and also our price outlook. So majorly our wet season crop production survey aimed at providing relevant information regarding estimated production volumes for selected commodities in Nigeria, and also we're able to like pinpoint major factors that farmers said affected them during the period, and we feel these factors are actually very key and can actually present like like a map for the fiscal monetary authority to actually take actions on. So here is our sample, our characteristics. So we reached out to around 10,000 farmers, of which we got 6,000 responses. When you look at the share of our respondents, we saw non-FX farmers actually accounts for 60% of our respondents, while FX farmers 39% of our respondents. Now across regions, most of our farmers that we surveyed were largely concentrated in the northwestern region of the country, accounting for 55%, and in the northeast, following closely at 22%. Then also, when you look at the regional spread of our farmers by gender, we know the challenge around gender in agriculture. So we had more male represented in our survey than females. Then also uniquely our farmers, the 8 bracket, more of our farmers were within the 26 to 45 age brackets. Okay, so for maize, basically we from our survey we saw that most of our farmers actually recorded to have cultivated more land in 2020 as opposed to 2019. And also, however, for maize, most of the farmers actually recorded that they used lesser fertilizer in 2020 compared to 2019. Our farmers were basically majorly optimistic of harvest expectation. And from our survey, our analysis, we're able to conclude that we expected that our production for 2020 was going to increase by approximately 8%. That's from 2019 levels of 11 million metric tons of maize to around 11.88 metric tons of maize. And this is largely due to the significant effects of the explanatory variables of land usage and favorable weather condition, mostly in the northwestern part of the region, where most of our farmers are actually largely concentrated. For our outlook, for our maize price outlook, we actually expect maize prices to be bullish in 2021 amid aggressive demand, majorly from industrial buyers. And also, we know that the CBN actually included maize in the import ban list of the central bank. And this will mean more demand for locally produced maize, and this will pressure up prices of maize. However, we believe that there are some factors that can still weigh on the prices of maize, and that's largely due to, so we've seen the CBN also move in the area of increasing disbursements from National Strategic Grain Reserve, and we think that could possibly weigh on prices of maize in the short term. Then also CBN's 300,000 metric tons of maize anchor borrowers intervention could also impact on the prices of maize for the period. Then also import waiver. There was a news recently that the CBN is going to may have to grant import waivers for some companies to bring in maize. Then we think if this is actually achieved, it could also impact on the prices of maize in the short term. Then also successful dry season cultivation ready for harvest between May and June are also factors that we believe are will largely affect the prices of maize for this season. Then for soybean, most of our respondents actually recorded that they cultivated more land in 2020 compared to 2019. And also they used more fertilizers in 2020 compared to 2019. And they're actually very optimistic about the harvest expectation during the period. So as a result of our analysis on our survey, we found out that we estimated that soybean would increase by approximately 5% from 630,000 metric tons in 2019 to 661,500 metric tons. And this was largely driven by the impact of fertilizer usage and also the weather conditions in the Northwest and Northeast during the 2019-2020 wet season period. So going forward, we think that due to the increased demand for domestically produced soybean, we think prices of soybean will remain bullish. And if you look at the import parity of soybean, right, it's more expensive to import soybean into the country currently than purchasing it locally. So we think this shift in demand to locally, despite our supply supply gap, supply shortfall, will actually pressure the prices of soybean going forward. Then also, we believe that this will weigh on the possible effect of the African Continental Free Trade Area Agreement, and also the opening of the land borders. So quickly, we'll go to Paddy Rice. So during the course of our survey, we were able to find out that more farmers actually cultivated more land for paddy rice, then also used more fertilizer for paddy rice, and the average expectation for our farmers was kind of optimistic. So they expect to harvest more paddy rice. They expected to harvest more paddy rice in during the period than previous year. And to this, so during our analysis, we also found out that this was going to push our analysis. We saw that there was a significant impact of fertilizer usage and weather condition on output, and we expected that output is going to increase by 7%, from 8.4 million metric tons to 8.85 million metric tons. For our outlook for rice, we believe that despite policies aimed at boosting production in the rice sector, we know that there still exists a supply deficit of about 2.5 million metric tons of paddy rice. And we believe that because of the import parity of paddy rice, which is higher than the domestic price, we expect prices of rice to actually rise to reflect this shortage. Then also, if you look at the impact of the flood last year in major producing states of the country, then we understand that this short supply shortfall has not been closed, and so increased demand for rice will actually pressure prices. And also, despite the drive of the federal government to boost local products. So quickly, I have just 5 minutes more, so I would quickly rush through the rest of my slide. Now, from our survey, we're able to identify that topping the chart of farmers' concern is the lack of access to loans, then lack of fertilizers, and we believe that this actually forms a possible possible area of intervention for the federal government, and we think concentrating on these concerns can actually help boost production in this sector, and also to achieve our quest of diversifying the economy from the volatile oil market. Then also from our survey, we were able to ascertain that we saw that sources of finance for farmers during the period, actually from private companies, actually accelerated against other sources of finance. So in 2020, more private companies actually extended loan facilities to farmers compared to government, cooperatives, individuals, and others, and NGOs. So what are our recommendations for boosting production? Majorly, it's I would say, from our end, we think increased palliatives for smallholder farmers in terms of improved seedlings, subsidized farm inputs is very, very key if we are going to boost production in 2021. And if we are going to achieve our diversification plan in 2021, then it's very, very key. Then also, we have to look at ways of improving capacity of strategic food reserve. Now, so we have to build more warehouses, more silos, and also if you look at the rate at which we are depleting the reserve is actually faster than the rate at which we are replacing the reserve. So that's very key. We can check that and boost production. Then also increased budgetary allocation to the agricultural sector. Now, over the years, our budgetary allocation has actually fallen below 2%. And to drive activities in the sector, to drive production in the sector, we need our budget to be at least 10%, budget allocation to the agri sector at least 10%. And how can we also achieve this by supervising and ensuring that every project we want to embark on is duly supervised and monitored. Then lastly, we cannot underplay the impact of investment in research. Now, we can't drive a sector if we don't understand the factors that are actually inhibiting growth in that sector. So that's why we would recommend more investment in research to boost the agricultural sector and production going forward. Now, we've highlighted key factors that we believe is going to shape Nigeria's commodities market in 2021. And that's factors around the African Continental Free Trade Agreement, FX movement and management, fiscal and monetary policies on trade, then access to loans and land, which our farmers actually have identified as top concerns, then fertilizer adequacy and affordability. Then also the duration of the COVID-19 pandemic will actually play significant impact in determining the way the commodities market is going to go in 2021. At this point, thank you very much for going through with me on these slides, and going forward, if you have questions, please send in or just drop at the chat box and we'll try to attend to your questions. Thank you very much.
Thank you so much, David. That was a great presentation. We're just going straight to the Q&A session for press. If you have questions, you can drop them in the Q&A box, and you can also raise your hands and I can go ahead and unmute you to answer your questions. We have a first question here from Mr. Festus, and he says, good presentation and job well done. In your view, what are the reason 4,000 farmers out of 10,000 didn't respond to your survey? I also want to point out that we have members of AFEX, and so they would also be answering some of your questions. Let's see. The question is, what are the reason 4,000 farmers out of 10,000 didn't respond to your survey?
Okay, thank you, Mr. Festus. So to respond to your question, so majorly, we sent out surveys to 10,000 farmers, of which from farmers we sent to, like some of them actually we didn't get feedbacks from them. And also the fact that some of the farmers who also sent back their feedbacks, they didn't feel all so we sieved out farmers that didn't answer all the questions. That's questions that we feel that are very, very important in helping us with our analysis. So that's what fits into the 4,000 farmers that were out of the 10,000 farmers. I hope I've been able to respond to your question. Thank you.
Thank you, David. We have another question here. We know there's a security challenge. In your survey, what are the response of the farmers on this issue?
All right, thank you, Festus. So security challenge. Now, so okay, so from the responses of our farmers, right? Let me take you back to our charts. So let me share my screen again. So let me take you back to the presentation. So you are going to see that though our farmers. Okay, sorry, I'm trying to take you back to this. So can you see my screen? Okay, yeah.
Yes, we can. Yes, we can.
So from the ranking of our top 10 farmers concerned, insecurity is also there, but they didn't respond that the significance of it to them. They feel they're more concerned about getting access to loans, to fertilizer, to herbicides, machineries, and others compared to security challenge. So from our survey, insecurity was not very significant and didn't actually form laid at the bottom of our chart in terms of top farmers concerned. But however, we cannot underplay the importance of security in boosting production, crop production. Why? Because we may not see the impact. We may not see the impact on the macro level when it comes to crop production, because the states, the regions that has been affected by this challenge doesn't account for much in terms of crop production. So it may not significantly affect our crop production. But however, in the medium to long term, I think it's a very, very important concern, or a very important challenge that the federal government and every other stakeholders involved in keeping peace, keeping security should actually look into, because it will significantly affect productions going forward in the medium to long term. Thank you.
Thank you, David. We have more questions coming in. We have a question from Joe Awo, and it goes, what's the impact of 2021 Commodity Outlook on soybeans and maize local production and industrial demand?
Hi, good afternoon, everybody. Akin Kakitule is my name. So just permit me to answer those questions. From our research and from our understanding of the ecosystem, there's little or no possibility that demand will be abated in the ecosystem. There are two issues that has been identified in the research and from the commodities ecosystem as a whole. One has always been the muted production level that has not been able to meet local demand of these commodities. And the other has always been around the key issues that we identified in our research, top of the list, which is access to finance, access to inputs in a timely manner, and security and all the other challenges. So to answer the question, demand for maize and soybean in 2021 is not going to be muted. Our research actually pointed to the fact that due to the various government policies and perceived reduced production, there's likely going to be increased demand due to a lot of players in the ecosystem carrying out the need for the season. So we on our own part, we see much more increased demand across the whole value chain for maize and soybean in the year. And we expect appropriate response from key government policy makers in addressing this potential gap in consumption needs of these key stakeholders in the ecosystem. Over the months, we'll see various key stakeholders coming in with solutions that are likely going to address this potential shortfall in production.
Thank you, Yinka. I hope that answers your question. We have one more question here from Mr. Benjamin. How government budgets affect small farmers?
Okay, the question on how government budgets do affect small farmers as per our own opinion. So we've seen we've lost the level of participation required to increase the productivity of smallholder farmers has not yet been maximized by all stakeholders across the ecosystem. One of the key findings we uncovered from the research was in terms of financing smallholder farmers, there's been an increased trust from private players more than from government players, and which to some people and a lot of school of thoughts begs the question, should the role of the government be in directly subsidizing the smallholder farmers or putting in place structures that will promote private investments in agriculture? To a large extent, which most of our programs and policies supports, our opinion is that the government needs to focus on providing an ecosystem and promote commercialization of agriculture as a business across the country. We've seen a lot of private sector players, fintechs, providing structured solutions to smallholder farmers' challenges in the ecosystem through financing, access to inputs, access to a ready market and storage facilities. On the structural side, there are a lot of gaps in the ecosystem, which is on the government to fix, such as availability of storage facilities. One of our research last year uncovers the fact that compared to other countries that has an absorptive capacity for commodities produced in their storage of up to about 85 and 100%, in Nigeria, we have less than 1%, meaning even if we utilize all the storage facilities in the country, our current production will only have capacity for only 1% of our current production in country. And in terms of food security, this is a huge concern for key stakeholders across the ecosystem, meaning on the side of infrastructure, we need to build more storage facilities and create an enabling ecosystem that will ensure that whatever challenge comes upon us as a country, we have enough food stock that would cater for the need of the populace, right? And that's one of the places we see the government playing their role. And this question is similar to the next question, which is how is government subsidizing cost of farm inputs? The government has put a lot of efforts in terms of various programs that they've put in structures to ensure that these programs have impact on the smallholder farmers in terms of access to inputs at a reduced cost. On the CBN part, we've seen the success of the ABP over the years that has reached thousands of smallholder farmers and disbursed of over 500 billion in loans to smallholder farmers. Over the next couple of years, and especially in this season, we expect to see more intervention from the government in terms of structured responses to provide an appropriate solution for smallholder farmers to have access to inputs. From our own perspective, access to inputs in a timely manner is key and is one of the top key factors that is required to increase the production gap we currently face in the country. So the more participation by government and private individuals, the more we're going to see in terms of increased production by smallholder farmers, which has a tandem effect of increasing their productivity and their livelihood. Let me take the liberty of answering the last question by Mr. Festus, which says the focus is on maize, soybean, and paddy rice. What's happening in other commodities like oil palm, and what's about the others? Our focus on this report is more on the staple crops and commodities, which are heavily centered around those ones that we focused on this report, which is maize, soybean, and paddy rice. There are more structures that are built to address others, but for these ones, our focus is purely and majorly on those key commodities that were identified. Thank you.
Thank you, Yinka. We're just going to take one last question before we go into the full session. This is a session for press, and then.
So over to you, Adana.
Yeah, thank you, Yinka. We're going to answer one last question before we transition to the main conversation where our CEO, Ayodeji Balogun, will be taking a presentation. This session is for journalists, and thank you to other people who have joined in. Just one last question. What's the government doing to subsidize the high cost of farm inputs?
I'll take that, Adana.
Okay.
So I think there's a major debate about should we be discussing subsidy and how effective the subsidy is itself. We've seen several regimes of subsidy over the last decade. We've seen the subsidy era pre the GES program that gave farmer subsidy through the wallets. We've seen how it behaved during the wallet, and we've seen the current administration's approach to subsidize the cost of production of fertilizer, which is also living out now. And the question is, do we have a capacity to pay problem by farmers, or do we have an access to inputs by farmers? And I would argue that we need more access. We have an extremely suppressed demand of fertilizer, currently below 1 million, and one of the lowest country in terms of fertilizer usage per hectare in the world. So I will suggest and I will opine that let's ensure that we have quality fertilizer, and let's ensure we have enough volume available for every user. And in this case, we will be able to, the incremental income to the farmer from increased productivity would more than offset the cost of fertilizer.
Thank you so much, Deji.
Over to you, Adana.
Yes, thank you so much, Deji. We're going to be transitioning to the full conversation shortly. For all the press present, thank you so much for joining us. You can still stay here for the fuller conversation. We'll also be sending across the slides and a press release after this. And we look forward to you joining the rest of the conversation. Thank you to every other person on the call. We hope you're excited to join in the full conversation once we start around 12. And yes, we promise that it's going to be very interesting. We have our experts on the call, and they will be present to answer your questions during the Q&A session at the end of Ayodeji's presentation. Do stay with us, and we will start the fuller conversation exactly 12 o'clock. Thank you so much. Hello, good afternoon, and welcome to the 2021 Annual Commodities Outlook. We'll just give 5 minutes to allow other participants join in, and we'll kick off at exactly 12:05. We hope you are having a great day, and we look forward to enjoying the conversation with you. We'll kick off at exactly 12:05. Good morning, good afternoon, everybody, and thank you for joining the 2021 Annual Commodities Outlook by AFEX. We all know how 2020 panned out. We had a lot of interesting events that went on. COVID-19 for a start, the maize ban by CBN, closing down of borders, and every other interesting events that took place in 2020. And we saw a massive impact on the commodities markets. And so because of that, we decided to have this 2021 annual commodities outlook, which we release every year, but this time we decided to have a full-on conversation and bring everybody on board. Let's talk about 2020 and look at how 2021 will pan out. And so to that regard, I would like to introduce our CEO, Mr. Ayodeji Balogun, and he will be giving us a run through this. But before he comes on, just a quick house rules. If you have questions, please drop them in the Q&A box. If you have comments, please leave them in the chat section below. We're going to have a Q&A section just after Deji's presentation. And also, if you'd like to leave a comment, just please raise your hands and we can unmute you so that you can go ahead and leave your comment. This is so that we can just have a very organized conversation. Thank you so much, and over to you, Deji.
Thank you very much, Adana. It's great to be here today and to be sharing our 2021 annual commodities outlook. I'd like to introduce myself as a commodity trader, and that's we're here essentially sharing what we've seen from research, what we've looked at from speaking to over 10,000 farmers across the country, but also engaging with buyers, sellers, and looking at the international markets, and then macro indices for the country, and how all those factors converge to affect commodity prices. If you are a producer or an investor and you're wondering what will make prices be in June, sit tight and let's take the ride together. So we'll try to run through the deck in between 20 to 30 minutes and then have about 30 minutes for conversations and interactions after. I'll run through the global commodities review to look at what has happened over the course of 2020 and the onset of 2021 and how that may continue to evolve for the year and impacts on Nigeria. We will also look at the Nigerian commodities landscape, the state of play, what are the drivers and what are we seeing for the future of commodities. And that leads us right into where we want to be, which is what are the commodities outlook and what are our forecasts for the year. So always interesting to look at the different asset classes, particularly looking at it from the World Bank Pink Book, World Bank data on the indexes for energy, agricultural, and metals. And a particular inflection point of interest to us is how these assets have behaved post the onset of the pandemic at the beginning of March 2020. We'll see a major